All right, I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Compared to yesterday, I got out of Shopify and back into pins really small. Everything else is the same. Though I traded almost all these names today. Okay, really boring trading session. The market perfectly met our expectations. This is going to be a great day for people to have questions. So I'm just going to go ahead and say that at the beginning of the meeting so that in about 3.5 minutes when I'm done recapping today's boring action, we don't necessarily have to end the meeting. How did we close today? The SPYs here are up 0.15%. The Qs are up 0.5%. So relative strength again from the NASDAQ. And the IWM is pretty much flat on the day. Intraday price action here. We can just take this chart of the SPYs. I guess Qs maybe had a little bit more relative strength to them, but chop, 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 which again is exactly what we were expecting in this morning meeting. I don't even think it's worth going over this 5-minute chart. Chop, chop, chop. 10 a.m. number comes out. Quick down tick. They break that high. Then they break back almost to the lows. Then they break highs. I love that this was actually right here in the market from 10:20, starting with this positive Maribozu where we made new highs again, and then this inside 5 and up that kind of happened again. I thought that this was the potentially most productive part of the market. And even then, I was only calling for a move to 400, and we didn't even get there. Chop, 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 grind lower, new lows, chop, 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 rally into the close. Yeah, just very, very much nothing to talk about. Qs showing you some relative strength, and IWM showing you some relative weakness if you compare those charts. Is anything new on the daily chart? Again, what was our expectation today? Our expectation was chop. We got chop. Why is that our expectation? Because about 4 trading sessions ago, I had a false breakdown in the market, which is bullish, and 2 great trading sessions. Then a couple days ago, I had a shooting star, not the end of the world. The market should pull back on that, but the pullback was way deeper than it should have been because of Jerome Powell's language yesterday, and that overshot this market, which really took the bears back in, well, I should just say it took the bulls out of control. The bulls, you're having a blurry screen. I don't know why that happens once in a while. I spoke to the T3 Tech team to try to throttle up my speed or whatever it's called. But if you're having a blurry screen, tune over to the YouTube where the screen, I have it up on one of my screens here, it looks very clean. And if you're going over there, you might as well press the thumbs up button since you're over there. Anyway, chop, 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 chop. Exactly our expectations. SPYs, pretty much midpoint of this range. So we had a bullish signal, a bearish signal, and we're at the midpoint of a range. Very little to do. I think I literally wrote in my little morning note with my ideas, flip a coin. Flip a coin on which direction we go. And it's not surprising at all to see what that price action looked like. The Qs, on the other hand, were giving us a little bit of relative strength coming into today. I would argue that the Qs still have a degree of bullishness to them. And then with the relative strength today, they've maintained that. Yet the IWM had some bearishness to them coming into today's trading session and was set to test 186 support. Actually traded below 186 at one point today. We're looking, the IWM was a real concern here between 12:30 and 1 o'clock and beyond. We broke below 186. We made this 5-minute H pattern in the market, which is a bearish continuation pattern, and it looked like we might want to close below this key 186 support in the IWM, which would be very concerning because the IWM has been such a big leader so consistently for this market that eventually it might bring these SPYs and the Qs down. I think that the market in this pullback over the course of the last couple of days, even including the shooting star day, has been much more bearish than the SPYs and Qs actually show. You see it more in the IWM, but the SPYs and Qs have held up, especially the Qs, because of the relative strength that we've seen in mega cap stocks, which goes back to this Goldman upgrade, which those statistics that I learned today, that I wrote into the VTF at one point, blew my mind. This Goldman upgrade on the 6th a couple days ago, which has helped give the Qs this relative strength, is the first buy rating that Goldman has had on Apple in 6 years. And since they last had a buy rating on Apple that they got rid of, the stock has gone up 263%. So congratulations to the Apple analyst at Goldman for a job well done. I say that with the most immense amount of sarcasm that I possibly can do. Apple with a little bit of an inside day. So yeah, I mean that's pretty much it as far as big picture. As far as individual stocks go, I really traded this Palantir today. Palantir, I was looking for an inside and up if growth was relatively strong. Two inside days in a row here. I thought maybe this thing could go. It gave an okay move off the open. I was able to make a couple dollars in it. Looking at it through like $8.40 or $8.42 was the trigger we discussed. So if you're long versus that low, you had 10 cents or less of risk approximately. Gave a nice move here. I was able to sell some in the upper 40s. I sold some more at $8.56. I raised my stop to this pivot low. Worth just noting that this perfectly meets my rules for a trailing stop. Originally I was actually using like a more like a pre-market low, like $8.25. Once the ADMA caught up to opening lows, I raised my stop to $8.32, a penny below the opening low. And then when this pivot met my rules, I raised it to a penny below this. So that low is $8.40. I put my stop at $8.39. I got stopped out on the way down. I did not endure any of this pain. This is a failed trade that I was able to make money on, and that's something that we always love. And again, what are my 3 trailing rules? Pivot point, ADMA, catch up, new highs. So this is a downside pivot, right? Stock retrace real quick, creates this like continuation hammer that is a pivot point at lows. The ADMA was at least that price. It actually ticked right to the ADMA, or maybe a penny or so below it. And then shortly after, the stock is making new highs on the day. So that enables me to raise my stop here. It breaks that low. I get stopped out. I make a couple of dollars. I didn't trade it again for the rest of the day. I moved on with my life. So that was Palantir, which was a little bit of a focus for me off the open, even though it didn't end up doing too much. Other good stuff that was on the list today that I was not involved in. One was, I see this Oxy eventually failed, but Oxy off the open, we're looking at it along at 62. So I'm not sure if anyone was able to capture this off the open, but if you did, it was potentially, I didn't actually watch how it printed off the open. I don't know if the entry was tricky or not, but if it was as simple as the chart looks, and you got stopped at 62 versus a low of 61.89, which means my stop would be at 61.88, then you got 12 cents worth of risk here, and it gives a phenomenal momentum move before totally failing. I know some people were looking at the potential pivot low pullback trade. I like that trade. If you tried it here, especially if this inside 5 could have broken up, or even if you tried it here on the 15-minute correction and said, hey, it was just the market that brought it down to this spot. I like those trades, but I really generally only like them if I was in the original trade itself. As kind of a general rule. Doesn't mean that I'll never take them, but I like to be involved in the original trade first, so that here I'm just giving back profit as opposed to just taking an absolute loss. Google, we had a great call out at 9:40 with the relative strength to go long versus this pivot low as well. So that was another great intraday call out that we had today. CrowdStrike, I know a bunch of you guys traded. This CrowdStrike was very hard today. Very hard. Look, I thought the earnings report, this is exactly what I said in the morning meeting. I think that the earnings report is solid, but I am concerned at the move that it has had into the earnings report. And it's interesting because a lot of other stocks have been the opposite, like this last earnings season that we're just about done with, where the stocks were so beaten up that like a not so great earnings report couldn't bring the stocks down any further. This is more of what we've seen in a lot of bull markets, or in this case just with this one-off with Crowd, where had such a big move into the report that even though the report was good, that was my concern, was that it would be difficult to get some legs. Like I mentioned, since the last day of January, this thing's pretty much had a 30% move into this report. The stock is gapping up above 130 with my ADMA at 125. So I've got a stock here that's already rallied 30%. I'm looking at a name here that's going to open up $7.10 from the ADMA. It's not to say that it could not have opening momentum. It was a really good earnings report. It's more of a momentum tech type of stock. It's also kind of trading into this gap here a little bit, at least up to like 136. This thing could have had momentum off the open. Some of you guys tried it initially to the long side. And I'm fine with that if you were comfortable with your risk and you had, an appropriate stop loss and everything else. But I didn't think that was going to be an easy trade today. So while I was looking at potentially 130, and I don't hate this trade either. If anyone tried, pulls through 130 and is trying to pivot off the ADMA, a lot of times you see at least a decent bounce off of a pivot at the ADMA. You want to let the pivot come first. So if you tried it long off this low, or you tried it, long off the open for momentum, I don't hate those trades as long as you're managing your risk. But my thought process of it kind of just having too big of a move into the report and being a little bit too extended, I guess turned out to be correct. I guess that's pretty much it. Nothing else on here was really spectacular or really triggered that I think any of us were really involved in. So I think that's all that I've got. And in that case, I will turn it over to you guys for questions. I guess the only thing on my end, I was able to make a few bucks in Roku and Shopify and Snap even a little bit, and Pins a little bit. And just because someone, I think Steve was asking questions about my Roku position earlier, I just want to kind of talk a little bit about what I'm doing, even though it probably doesn't have any bearing on anything that you guys do at this point. What I'm doing in a few of these names is that I had trades in these stocks that were swing trades where I did really well in them. Shopify, Roku, Pins, this calendar year, like starting in January. I'm trying to remember when I was even involved in this Roku exactly. It might have been here on the 25th on this gap into 50. Might even have been earlier than that. I'd have to go back kind of into my prop reports and figure out exactly. But somewhere around $50, I had been buying and continued to buy into these upper 40s, and then I caught a great move, and I liquidated my position on the second, and extended there, and I had a specific game plan that I was following where I was booking profit at certain increments. But I was also doing that kind of cash flow strategy that you guys have heard me talk about, where I buy stock on pullbacks and kind of keep the difference. So, what I have decided to do with these names is kind of just continue to work that same trade, even if I've been out of it for a while. So, like, when Roku pulled back here, I took that stock back. So, like, and I'm doing it in increments below. So, like, let's say, for example, I liquidated my stock at $62 or whatever on this day. I might buy the stock that I sold at 62. I might buy it back at 61, and then I might have stock that I sold at 61 that I'm buying at 60. And I might have stock that I, sold at 60 that I rebuy at 59. And I kind of am just keeping that difference, with the idea being that, again, I'm kind of playing with the house's money, so that I, in theory, have enough profit where if I just re-follow the game plan that I was already doing on these trades by taking my stock back that I sold at lower prices, I could hold, I'd have to look it up to tell you exactly what price. I can start buying back into Roku at like $60, $61 and rebuy in the same increments in which I sold, but on the prices on the way down. And with all the money that I've made in between and the money that I've made on that trade, I probably could do that and hold Roku down to, I don't know what price I'd have to do a little math and look it up. At least $45, if not the low 40s at this point, before I'm going to be break even in it. So like a lot of what I'm doing in these things, and it's actually been working great for me in these choppy days, is you can see here, like with my Roku executions, all I'm doing is like taking my stock back. Like I'm buying a little at 61, I'm buying a little at 60, I'm selling what I bought at 60, $1 higher than that, I'm selling what I bought at 61, $1 higher than that, and then I'll just kind of rinse and repeat, and if it comes back down to 61, I'll take that stock back, and I just keep making the difference. So, you know, for every 100 shares that I've done here, assume that these are 100 share lots, and if they're more than that, you can just do your own math on that. You know, this piece to this piece, I'm catching $1 on it, it's $100. This piece to this piece, I'm catching $1 on that, that's $100 in my pocket per 100 shares. And again, all I'm doing is I'm taking the risk back on the original trade that started in January that paid me really well. I'm taking that risk back because I want to be involved in Roku anyway, because I still think that they are very much a buyout candidate and that may still happen in the future. And you know, I just continue to make that kind of cash flow difference, and again, I could hold stock into the 40s, and I'm doing, you know, this. It's the same thing with the Shopify. The Shopify was a much longer trade actually, where I was trading it kind of all through this base for this breakout, and then it came back in, and I rebought on the pullback here, and you know, liquidated the position, and it's just you know, it's pretty much just the exact same thing. With Shopify and with pins also. Pins is one that I got in a little bit more recently again. That I think I might have bought in on like one of these days here. Around $24 is where I started building in, I think, with a target above 26. So when I got this, you know, big move above 26, I liquidated my position, and it pulls back, and it's like, okay, I begin to kind of nibble again and potentially keep that kind of cash flow. So that's all I've been doing with those kind of names. You know, I got out of shop entirely again today because it just went up so much that it was at that point for me to do that. Same thing with Roku, I got in and out of it. Same thing with Snap and pins. I'm keeping a little bit overnight. But again, it's just kind of taking my trade back, creating the cash flow for myself when I'm already in a win-win situation. But the difference is that I already liquidated those positions entirely. So it's like the same as what I've described, where you're already in that position, you sell some because it's extended, you buy it back at those, you know, maybe at those moving averages or whatever, you keep the cash flow difference. This is just the same thing. Only difference is that I had liquidated the trade entirely, and I'm getting back in on those pullbacks for more cash. So it's worked well in these choppy environments, because with this market doing nothing, you know, if I'm able to put an extra, you know, $1,000 in my pocket on a given trading session within all of this chop by making money off that chop, you know, it adds up over time. So it's not bad. So anyway, that's all I got. I'm happy to answer any questions you guys have. So first I'm seeing here is from DJ. Good question, Rich. First question from DJ. Do you use hotkeys for adjusting the price of your stop and limit orders? Say you buy XYZ at $10 and you want to sell at $9.75. Do you do this purely through hotkeys, or do you have a hotkey brings up a stop order, but you use your mouse to click the price and put it in manually? I do not do anything with a mouse. I do not do anything with a mouse. Everything is with hotkeys. My F keys on my keyboard, they are market buy, market sell, bid, offer, buy stop, sell stop, uptick, downtick. I do all that. And then even if I wanted to change an offer or something like that by a little bit, let me just think of what's the symbol for that stupid satellite radio company? I'm totally blanking on. Really cheap stock. It's just a good one to put an order in. We're not. Yeah, Siri. Thank you. So I even have hotkeys for so look. So right now, so I got hotkeys that change my tier size. Right, you guys can see that here. So 2,000 shares, 1,000 shares, 800 shares. That's all my keyboard on the side. Right. So I'm gonna set that for 100 shares because I'm just making an example here, and I really don't want to buy any stock of Siri. Now I'm deciding I want to put a bid in at $3.77. Bam, just like that. That's how fast it is for me. So I pressed. For me, it's F6. For you, it's something different. That brings up this bid tier thing. I can increase and decrease my bid and offer using my arrow keys by a penny. Or if I do shift arrow keys, I can do it by 10 cents at a time, which is really useful if you're dealing with expensive stocks. I press, what I did before was I set it to 70 to 77 and I pressed enter, and then that order went in. So right here I am bid to buy 100 shares of Siri at $3.77 on NASDAQ. I also have hotkeys here for incrementing and decrementing. SI. How's that not lower on that? Silvergate Capital to wind down operations and liquidate Silvergate Bank. I guess that's not the entirety of their business. Look at these offers building up here. It's you can't hit the bid to get short. Those are stepping shorties there. These are short sellers wanting in real bad. So you see that stepping. They're just, it's old school. It's called a stepping shorty. You can tell that these are short sellers stepping down to 02, stepping down to 01. Sellers want in so bad. Any price. Sometimes when you see them print, it's an opportunity to create a squeeze. Let's go, Mike. Anyway, back over to that Siri before my bid gets canceled. I also have hotkeys to increment and decrement my bids and offers and stops by a penny. So if I was at 77 cents on the bid, and I sit at 78 cents as a refreshing buyer, or I'm not getting filled at that price, I can just very quickly just press one button and I just change my bid from 77 to 78, 78 to 79. I just want to put a warning out though for this hotkey. You got to be very careful using it because every time you do that increment decrement that I just did, it counts as a canceled order and then a new order. And you have to be a little bit careful about having too high of a percentage of canceled orders versus filled orders. I've seen traders in the past get in trouble using that key because their cancellation rate is 85% or something like that, and FINRA and the SEC don't like traders having cancellation rates at that level. It looks like you're manipulating the market. So I'll use that increment decrement a little bit, but I use it somewhat sparingly because like I wouldn't use that from 77 cents to 87 cents. I would just cancel the bid at 77 and put it at 87 as an example, because I'm not going to have 10 canceled orders. And I just cancel that order. And Siri, what's that SI doing? Smoke show. I don't think any of those shorts really got hit. Pat got that news so fast too. If that wasn't hard to borrow, I probably would have tried to whack some. But I wasn't going to pay for the borrow and then be sitting on the offer and not get filled. This thing is done. Though I'm sure, knowing what we've seen, how all these companies that go bankrupt have big short squeezes before they go to zero, maybe there'll be one final big squeeze in SI at some point in a couple of days on the way to zero. SI dead. Is like Coinbase moving on that? A little bit. Down $1.50. From Kyle. Question behind my execution for Palantir entry off the open. This was not my main watch. When I then switched to Palantir, I had broken yesterday's high, which is really the right trigger. The stock was holding around 840, 845, and I thought about bidding in here, but then did not pull the trigger. Instead, I bought through 850, giving myself a worse risk reward. Yeah, I don't like that. Was just wondering going forward, if I missed the actual entry, but the stock is holding this level, should I try to get in or wait for another setup? It's a tough one. So as a very general rule, I think I said this the other day too, I have found that the best trades in the market only give you one opportunity to be able to get stock. So usually if there's a specific entry point, like $8.42 was really the trigger buy here, and it went through it, and you weren't paying attention, and now it's a few minutes later and you type the stock up and you can still get that same price, a lot of the times it's a bad signal, because if it was going to be a really, really good trade, it would already be at 860 and you would have missed the trade entirely. So it's not the best signal in the world if you're able to get that stock. It doesn't mean don't take it. I will sometimes take it. You just kind of have to recognize that you're going to have a little bit of a lower probability of success because you were late. I would much rather you still buy the right trigger point than buy 850. I don't see 850 as a trade unless you were doing this inside 5 and up. That's an entirely different trade. You know, if you bought on the third bar of the day because you bought 850 because you're taking this inside 5 for momentum continuation, that I'd be totally fine with. I still would say, and this goes back to what I think I was saying to Eddie earlier about Oxy. I would still always say that you want to try to be involved in the first trade as much as possible. Which doesn't mean to say that I don't ever take the secondary trade. I sometimes do, but it's the same thing. If you are late or you're taking the secondary trade, it just tends to mean a lower probability of success. So, yeah, I would say either don't take it at all, or take it at the right price if it's giving you an opportunity, or wait for an entire new setup. I really don't like the 850 buy if it's in the first bar. If the 850 buy was on the third bar because you're buying the inside 5 and up, that's a different setup, and I'm fine with that. So, I hope that helps. For Mike L, this happened to me today, but I can't remember the levels. I bid for Oxy, and then I only got filled 5 shares at that level. It's the worst. Then the stock started to run away. Since I have a no chasing rule, I just ended up selling those 5 shares at my first target, and I made like $2.85. What do you do if that happens? Is it the same as if you didn't get filled and just move on? Yeah, a lot of the times I do exactly what you're describing, Mike. I make that $2.85, which buys me about a quarter of a beer in New York City if I'm lucky, and I move on with my life. That's where my tape reading skills also do come into play a little bit. Sometimes I can kind of tell, and this goes back to that increment decrement of bids and offers. Sometimes I can kind of tell based on the tape that I'm probably not going to get exactly filled at that price, and I'll try to increment by a couple pennies real quick to try to get the fill. But I'm not going to overly chase. I like your rule, and if all I gets that 5 shares and it's ripping in my favor, then I'll take my $2.85 straight to the bank. SI, absolutely dead. It's already staging its rally though. What was the low? 230? That's like $1 rally right there. I'm not taking the long side of this trade though. Off Palantir, what about the 850 as the previous daily high pivot? Yeah, so I really, the whole point of these tightening patterns with the inside days is for their execution. So I guess you could take a trade at 850 off that daily pivot, but to me that the actual real trade is the bullish consolidation with the 2 inside days. That's my trade. So the real execution on that trade is going to be that $8.42, $8.43, that break. This is just like, I don't know, you're looking for continuation of the move, I guess. I think it's a more difficult trade. I prefer the tighter trade. Lenkov, when you are trading around your core position, like with Roku, how do you determine at what intervals to sell and buy? I tried this a few times with NVIDIA with $2 delta between buy and sell, but I sold most of my stock and had very few opportunities to buy it back. Sure, so whereas with the names I just mentioned, I did fully liquidate, what I generally prefer is a combination of trailing and kind of cash flow interval trading, like I was describing there. I like to have both in most of my game plans. Sometimes I'll have a game plan where I'm 100% trailing. That's what I did with Delta, where I'm almost 100% trailing on the Delta trade yesterday. Sometimes I'll have a game plan where I'm like 100% working increments, which is kind of what I've been doing a little bit more with like Shopify and Roku. But most of the time, what I prefer is a combination of both, because sometimes you do get these trades that just run away from you, and you're on a stock, and then it just is what it is. It's happened to me plenty of times, and then the thing just continues and continues, and you're not making any money. And that's what I've always said, is that what I'm trying to do is come up with a math problem here on the probability of getting just really good continuation where I'd be better off holding all my stock versus the probability of being in more chop. And if I'm in a market where there's more chop, I'm going to end up making more money by working those ranges more and selling and buying back the stock. If I'm in a market that's trending, or a stock that's trending or really strong like NVIDIA, then I'm going to end up more by holding and trailing a much larger percentage of my position. And it's obviously really difficult to try to figure out what the right move is for every stock. I think generally consistency is a good idea. Generally a combination of both is a really good idea. But you try to establish that in your game plan before you ever execute the position. What really are my expectations from this? So like the Shopify, I did that when it was in this range below 40 for like months. And I was just doing it with like 50-cent increments, and I was just kind of like printing money for months in this area when it was like locked between $30 and $40. I would have made much less than that if it broke out here in August, which I think is like when I started it or something, and never looked back. I would have made much less with that game plan. And so that'd be more like NVIDIA. You'd make much less if you were trying to work those ranges and buy back your stock in something that just completely beasts. So again, it's trying to figure out that balance between the two. And then as far as what the increments I do, it definitely depends on the stock I'm in, the beta of the stock, and the price of the stock, from risk perspective, and how many shares I have also. For a really expensive name like a Roku, it might be 50 cents or $1, or really what I'm doing in Roku is I'm doing $1 up in this area, and then if it were to drop into like the mid to low 50s, I would reduce it to 50 cents as I continue to take my stock back, because that's how I sold it on the way up. You want to try to find the right increment where you can make money and get the fills that you want, and do some buying and selling and buying and selling and buying and selling to work those ranges. If the increments are too wide, then you're never going to get any fills. If the increments are too narrow, then you might have like a risk problem, or you're not making enough on those fills. So you want to try to find the happy medium. And again, what that right amount is really going to be, I think, very much dependent on the price of the stock and the way that it moves. From Funny Shark in YouTube, does buying or selling CFDs affect the price of the underlying asset? For example, I shorted 1,000 shares of Apple at X price on CFDs. Does it affect the market? Does it affect the stock price? I don't know. I don't know a lot about CFDs, so I don't even remember what CFD actually stands for. Someone maybe can remind me. But those are I'm pretty sure those are illegal in the United States if you're US based to trade those. They're a way for cash for deposit. They are a way for foreign brokers to trade like these US markets and US equities. I don't know if they're UK based. I think that I do know that there are some UK based companies that engage in CFDs, but I also know that there are companies outside of the UK that engage in CFDs, and I know that they're illegal in the United States. Contract for difference, I think, is what it stands for. That's what Funny Shark is saying. That's what Zahora is saying. John Lee saying maybe cash for deposit. I'm not 100% sure. I think it's contract for difference. Does that affect the underlying market for these names? I genuinely don't know, because I don't know what's going on behind them. I don't know if those brokers, which are non-US based, have links where you buy 1,000 shares of Apple and they have to buy 1,000 shares of Apple on the real market, or there's a chance, and this is why I definitely don't recommend these types of brokers. There's a chance that they're making their own market. I've seen that more in the FX market. I know of FX brokers who are kind of like China and Australia based, that there's not even a real market. They assume that people are going to lose money, so they come in on the opposite side and they just take in that. It's almost like as if you're on a demo account, and then if you lose money, there's no problem, and if they have a trader that makes money, then they have to have a big enough of a balance sheet to be able to pay that trader out. It's almost like a simulated environment that they're just making up, and I've seen that in the FX market exist. So I don't know if CFDs are like that as well. If that's true, it probably has no effect on the U.S. equity market, or if those brokers actually are taking your trade and somehow placing it on the equity market. I generally would be pretty careful. Just make sure you know who you're working with. Yes, not allowed for U.S. citizens. What else, guys? Right. Any other questions? We were able to kill a decent amount of time, despite it being such a slow day with your questions. So we can wrap it up if you guys like. I'm also happy to hang out with you guys a little bit. But it looks like wait, did I miss one from Kyle? Sorry, I missed one from Kyle. Another question is, if you have 3-4 tickers that are all setting up for trades right at the open and are set to open right near their trigger levels, do you have a process for which name to go to first? Like if you have 3 different tickers in play, all set to open 10 to 15 cents away from their level right at the open. Sure, that's a really good question. It's pretty rare that I get 3 to 4 tickers or more that are set to open up right at my price, right as soon as the market's going to open. It definitely happens, but I would say it's rare. Usually it's just a couple. Usually just a couple set to open up there, and it makes it easier for me to limit. So you can have, there's a couple things you can do. You can have an alert system where you just get the alert gets triggered if it's a few cents away. You can have multiple market makers up at once. So a lot of times what I might do is if there's 4 tickers and I know that I want to be in all of them for sure at certain trigger price levels, and they're going to all open within 10 to 15 cents of my level like you're saying, I will, as quick as I can, put a buy stop in for entries, assuming they're all longs, put a buy stop in at my trigger entries on all 3 or 4 of them right away. And then I kind of watch it real quick, and as you know, I'm like constantly typing up symbols, and I'll be scrolling through those symbols, and if something pulls away, I'll cancel that buy stop, or if the risk is looking like it's incorrect, then I'll cancel that buy stop or adjust that buy stop, and then whichever triggers are the ones that I'll obviously be in. So that's kind of how I handle that. That's a good question. Okay, on that note, looks like we got through it. So, Wednesday, what a boring Wednesday, chop, 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 but I hope everyone listened to the morning meeting today, in which case you didn't get hurt by today's chop. Maybe even you were able to be profitable from a few of the trades that we called out that were decent, and probably not a huge, massive write home about winning day for anybody, but I was able to make a few bucks myself, which I'll happily take on a day like today. So have a great night, everybody, and I will see you all tomorrow.